way through the month. Actually, I guess more than halfway with February, right? I know most of you are locked down under. I shouldn't say lockdown. You're stuck in your house because of extra cold temperatures. Maybe some snow. I know it's summer here in Maryland. It's a high of 49 today, so we're not under the freeze. But I know a lot of you out there are. Chicago, Midwest. My family down in Texas. My sister lives out there in Austin, and she's like, we don't even have winter coats. She's like, I don't know what we're gonna do. I was like, just go buy some. Amazon. It's an amazing thing. Overnight Prime. So anyway, from wherever you're logging in, I appreciate you guys coming out today. We'll do some market breakdown. Look for other activities for that we could capture during the week, and maybe find some good potential setups for later today. Before we kind of dive into things, let's. I'll give you kind of a quick skinny on who I am for those of you that are new that don't know who I am. I run a company called Keep Trading Simple, and my kind of goal by doing these presentations with Nadex is really to help educate the public out there about how to trade the markets, remove a lot of the distractions that the quote professionals tell you that you need to have, the secret sauce, the secret indicators, and those are really, I mean, at the end of the day, they're not things that you need to be successful in the markets. And really, it's just about teaching you guys a new way of doing things and looking at it. I've developed a number of different strategies, particularly with Nadex in mind. 30-minute trader, 5-minute binary courses. I have a high volatility course that came out at the beginning of COVID. We do like a weekly newsletter for market breakdowns, as well as again, the high volatility trading is really not just COVID. It's also anything related to crazy news events, interest rates, elections. Geopolitical events, anything like that. You'll hear me, talk about parabolic retracements of things all the time. That comes from the high volatility trading course. I was an advisor for one of the big three banks. I realized very fast that if I wanted to get better at trading, or at least I assumed, I needed to go on the inside. I started off like you guys. I'm not a 12th generation trader. I started off back in '99 and the 2000 in the tech bubble is when I started trading, and started with stocks and traditional options. Came across, found currencies, learned how to trade futures after that, and then obviously found binary options a few years ago. And again, I'm not going to say that one is better than the other. I'm just going to say that having multiple arrows in your quiver is always the best way to be a trader. Certain days, certain markets move. Other days, other things don't. It's about finding the correct opportunity, and then you apply the correct tool. I'll leave it at that. With that said, after that, I came out, and my passion is really truly teaching. So again, every one of these presentations, I want you guys to take some type of golden nugget from it. Something you either didn't know before or see differently is really what I'm looking to really kind of do with this. All right. Um, it is amazing looking at that picture that was a year ago, and now it's they all look different. The girl's twice the size. The one on the left has hair down past his shoulder. The one on the right just cut his hair off to donate it to, I guess, sick kids. He had real long hair, and it's as short as mine is in that picture. But anyway, you guys know how it is. So let's dive into the disclaimer. Trading on Nadex involves risk. It may not be appropriate for all. Members risk losing the cost of another transaction, including fees. You should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, so before we dive into charts, news, everything else, let's go over what we're going to cover today. First things first, I want to cover the upcoming news events. Now, last week we had a question. I did email the person back. They sent me an email in, but I got asked what websites do I use, and again, is there a cost for those websites? I'm going to answer the question now. I use Forex Factory and I use Daily FX, and I've kind of highlighted both of those platforms or both of those websites during our morning sessions. If those of you that don't know, we do our morning sessions from 9 to really 9:15 is what we shoot for. Sometimes Todd and I talk a little bit late. But for the most part, from 9 to 9:15 every morning, Monday through Friday, we try to jump in and talk about the hot opportunities of the day. I definitely bring up news, and again, a lot of the catalyst for intraday movement is coming from news. So for me, this is a big part of my trading because, again, 3 kids, virtual schooling. I'm the commissioner of like youth lacrosse for my sons, and I have to manage like 5 teams. A lot of stuff going on. It's nice to know when I need to be in front of the computer. So a lot of people were like, "Oh, news trading, you should just stay away from." No, I like news. Again, it tells me when I need to be around, and it gives me a catalyst for what tends to be a lot of movement very quickly. So I like those things. So news events is very important for me. Then we'll dive over and jump into the indices. They've had a wacky morning where it was a strong up, and then we kind of based, and now we're having a strong down. So we'll cover those, look for opportunity of where those things could potentially stop. Then we'll dive over into the currency market. And again, currencies has been kind of it's been move whip, move whip, move whip. So we'll talk about opportunities. We're hitting a lot of the 4 hour zones that I really love. 4 hours are by far my favorite. A 30 minute, it's hard. 30 minute for intraday, but I love 4 hour zones. I don't really go much higher than that. I don't necessarily need to. But 30 minute, 4 hour are my two absolute favorites, and we'll dive into those. Then we'll cover commodities. Oil and gold have had quite a crazy morning. I don't know if any of you attended the early morning session today, but we talked about a potential bounce area and in gold. And guess where it bounced at? Right at the level we talked about. So hopefully some of you guys were able to grab that in some of the Natix products that matched up well with it. All right. So with that said, let me switch over. Let's go to the correct browser. Make sure I pull the right one up. There's silver. Let's pull news up, and we'll go over here. All right, so let's first talk about currencies. It's right on the top, the 24-hour pip changes. So right now you can see, and for the most part, what we're seeing and how to dissect this is we're seeing dollar strength, okay? We're not really seeing much else besides dollar strength. I mean, I guess we're seeing a little bit of pound strength, right? I don't know how much of it is pound strength versus yen weakness. It's probably a little combination of both. But again, when you have strong pound versus strong dollar, you have to have a winner. And you can see that that one's pretty much flat at -7 pips. So it's not a huge mover, right? You're not seeing that gigantic movement there. But for the most part, I mean, dollar yen, dollar Swiss, dollar CAD, all up, Aussie dollar down, euro dollar, pound dollar, they're all down a little bit. And then again, pound yen is up about 68. That's at pound strength coming in versus the yen. So again, there has been definitely some play this morning. Tomorrow morning is kind of where the next bit of this is going to be. All right, or the next part where we can really use this top piece. As far as news goes today, there wasn't really anything big. There were small minor events. Really today it's been more about really kind of what news we see over here on the right-hand side, the latest stories, and we're seeing things out of China. The big mover this morning was Bullard, and I highlighted these this morning, so I'll bring them up again. Just a few different things that, mentioning that we're in good shape with inflation right now. They're talking about, we expect to see inflation and we'll take it as we get it. But for the most part, this is not a bubble. This is just normal investing. We're not seeing this. These were all positive things. It says there was no value created at the end of the day from GameStop. Again, bringing up some kind of interesting news, right? About what was going on with Reddit and Reddit traders. We're talking here about financial conditions are generally very good right now, right? It's interesting. Conditions are very, very good, but yet we needed to pass a $1.9 trillion stimulus package, and we're not sure what goes in it. So it's kind of one of those, I don't know. I know at a Maryland level, I know our governor here just posted, Governor Hogan, he just basically created our own stimulus program because, the federal government can't get it done, to give direct compensation back to those most that need. Again, it's interesting that states are rolling this out. Again, states are able to get it done. The federal government is still kind of confused. I mean, at this point, I think everything will be over by the time they end up figuring out what to do with the $1.9 trillion. The other comment that he did bring up today was, and again, this is mentioning those Reddit traders. I wanted to make sure we bring this to your light. I don't do any analysis of Bitcoin on here, but I will say Bullard is the guy that is known for watching he's kind of I don't know, for lack of a better word, he's the champion on the Fed for cryptocurrencies. He's the one that tends to make the most statements in regards to it and has done the most research, and he seems to be the expert on the Fed. Most of the comments come out of him. All of a sudden, when he's saying you don't want to go with non-uniform currencies, it kind of brings up a couple red flags for me. China has talked about outlawing it. European countries have talked about outlawing it. The United States have talked about outlawing it because, again, something that is untraceable, which they know where it comes from. We saw that North Korea just stole like $300 million worth of Bitcoin from, people and accounts to fund a nuclear program. It's one of those things, the security behind it is being called into question. And again, Bitcoin's response is exactly as you would expect. Bitcoin shot up to $50,000, right? which makes sense. You know, it is the anti-establishment, but again, remember what happened with GameStop, right? I mean, at the end of the day, yeah, a whole lot of money changed hands, but GameStop's exactly where it was before. The attempt of Reddit to take down Wall Street, Wall Street's still here a week later. I mean, how many people ended up losing money on GameStop that, heard that, well, this is going to go to, this is going to go up forever, right? And ended up getting into it at $480 and lost money on it. So again, it's a repeatable cycle. Everybody tells you to buy it and it goes down, right? Um, Kind of the same thing as we get we get closer and closer to, Elon Musk saying, yeah, Bitcoin's great, buy it. My company's going to accept it. It's like, is that a level of manipulation? And I personally believe yes. But when the people that are creating the rules are saying it, you need to be very cautious. So again, just be cautious about this one. The reaction going up in Bitcoin today was exactly as expected from some type of comment like this. But remember, at the end of the day, learn something from the GameStops out there, or the BBYs, or the AMCs. All right, or even silver. I mean, silver's supposed to be at 100 by now, and it's definitely not. Um, all right, so that's what we got as far as news go. Let's go through the rest of the week. Like I said, not much today. Tomorrow is the big day. Now we have CPI data, and again, this is that inflationary number. So gold could be retracing into tomorrow morning, but CPI, and again, it's year over year, right? The year-over-year numbers are not quite as important, and again, 0.6% inflation year-over-year, much lower than what kind of the targets are for inflation. Nothing they can do about that, but again, it is a big number. It will move the pound, and as much strength as we've seen in the pound lately, it's given us some good trading opportunity. But it is early. It does go before the UK Open. 8:30, we have core retail sales. Now, core retail sales is extremely important. You can see the numbers last time were not good. They're both supposed to be positive this time, up 1.1%, and that, that should be good. Again, it is a month-over-month number, so these will be readings back from January-ish. If these numbers are bad, it's shown that the economy is not necessarily in as good of a place as I think a lot of people think that it is. But I would, they were definitely a miss last time. I don't think they want to make that mistake 2 times in a row. But again, 8:30 tomorrow morning, we should have some type of psychological response in the indices. If you're an NQES or the Dow trader, definitely, definitely trade those. Okay, that this is going to be a big one for those. Very positive numbers, we should see a spike up. Negative numbers, we should see a spike down very quickly. FOMC notes tomorrow at 2. Tomorrow night, this is going to be my, and hopefully you guys can see this here, this is going to be my trade of the week. I'm going to start giving you guys, I think, the opportunity that you guys have to follow. Unemployment change, Australia's had some very kind of mixed numbers back and forth. It's good, it's horrible. They, had additional lockdowns for 7 days. We've seen a lot of data out of Australia lately. And again, unemployment change and unemployment rate are very big for the economy. There's supposed to be a positive employment change. Unemployment rate is supposed to go down a little bit. Again, this is a little bit of a mixed number, but I think if we hold at 6.6 or maybe even rise a little bit due to lockdowns, this could really set the Australian currency off. So again, it's it's good, it's strong, it's high. Again, I'm looking for the Australian dollar to kind of roll. Actually, Aussie dollar and Aussie yen are 2 pairs have been traded in Nadex. Looking at those to kind of look for shorts in both of those pairs. So I think this is going to be the setup of the week. Going into Thursday, you can see all we have is our crude oil inventories. Again, typically it is Wednesday this week because of the holiday. It will be on Friday. I'm sorry, it'll be on Thursday. There has been a lot of news in here. The oil market, the oil rally makes further easing as oil supply is curbed. There's something else down here. Oh yeah, the U.S. freeze cuts oil output by over 2 million barrels a day. It does, sure, but it also lowers. I love headlines like this, right? It's so cold we can't produce oil. Well, that's great because when there's a foot, 2 feet, or 3 feet of snow on the ground, nobody's leaving their house either, so we're not using the oil. Just keep that in mind, right? But again, it's good for kind of jacking the price of oil all over the place. And then Philly Fed Manufacturing Index, that could leave it. That could help us with the Dow at least on a Thursday morning. So we'll see how that one rolls out. And then Friday is a big day. It's all the manufacturing and services PMI. Again, PMI is Purchasing Management Index. Now, retail sales early on for the pound should be a nice little mover, but we do have the flash services at 4:30, so it could be a kind of a whipsaw. And you see, they're projected to be -3. If this comes in at a -2, although it's negative, that's not necessarily bad, right? It's less than what it's not as bad as what they thought it was going to be. That's a positive for the pound, which could lead us in a pretty nice little pop, right? As well as flash services are getting closer to the 50 number. Now, You don't have to know what all these, and I say it every time, you don't have to be a master of what, flash services PMI and flash manufacturing PMI is, and how do I trade it with France and Germany and Europe. Understand that the magic number over here is 50. Okay. So something like this right here, the services number that's at 47, it's close. If this jumps over 50, that's showing expansion. Under 50 shows contraction. So you can see it's kind of a mixed number. And services is what is directly hit by any type of a lockdown. Okay, and that's why you'll see that services is highlighted here, because manufacturing, I mean, people need good, if you're locked down, you still need goods and services and everything else. Services is where it gets a little bit, hindered, right? So when this starts going above 50 is a good sign for the euro. Obviously, between these two, Germany has the most power. And again, their service, as you can see, is also lower here at 46. These both dropped. So that'll take into account. When you combine all of them, that's where you get the European numbers. This one coming here at 4. But for the most part, Germany is pretty much going to be what the determining factor is. And then we see the pound, right? So a lot of data tomorrow morning. Now, 8:30 on Friday. Sorry, on Friday. Friday, we have the Canadian dollars retail sales. So you can see that this one is expected to be down, right? They were positive at 1.3. So this is all setting up right now. The market is preparing for very weak Canadian data. If there is a surprise, and this is either good data, meaning it's positive, or it's not as bad, meaning it's less than the 2.4, 2.5, again, those are all positive. So we can see the dollar CAD Canadian pair head straight back down to the downside. And then again, flash manufacturing, we're well above 50, so we don't have too much of an issue right there. So again, that's kind of our week at a glance. Hottest news, you can see that this is kind of an interesting one, hearing it right here, right? That China targets rare earth exports to hobble the U.S. defense industry, right? Rare earth has been a big thing for a while, and yeah, we'll see. So it's never good. This China is starting to acquire things that hinder us. The first thing that they did is they actually started in the Middle East. For those of you that don't know, China was in the process of acquiring as many Middle Eastern oil companies as they possibly could, because if they can control the oil supply, it helps them in any type of further conflict. And it's one of those things that I know everybody's trying to get away from, fossil fuels, but they have their need, and they're going to have their need for a long time. They just don't produce gas. And if our biggest adversary has most of the rights, that kind of puts us at a disadvantage. So China's not, they're not being dumb here in what they're doing. And then it's all the blurred stuff. And then again, there's a couple other things from Draghi and, something from Britain. But for the most part, it's a pretty quiet day. Like I said, there were not a ton going on here. Most of it was from Yard. So with that, let's go over and bump into the indices, all right? First things first, let's talk about the NQ. So the NQ has had an absolute, we started with a big spike, right? It was really nice. It was like, woo, up. Then we kind of stabilized and kind of pushed over. You guys can't see my cursor here, but I'll draw you one just a little extra there. Makes it a little bit easier. You can see today pretty much straight down. This movement started happening today at 10:30. This is an ideal setup for a reversal. Okay. If you guys have never attended before, what tends to be the number one reversal times are 10 or 10:30 in the morning. Wow. The initial push was kind of to the downside, and then market opened. We spiked straight up into this 30-minute level, grabbed this 30-minute level up here at 1386, and there was your reversal. Everyone was, oh no, it's going to be a good day. And then, bam, they got hammered down. Now, it did turn down here. 13,734 was the area down here. You can see price came down as low as kind of right here, right? This is an area where you had to take profit targets in your short. Again, we'd had a big rally up, and you're going to see on a couple charts today, these big kind of what I would call racetracks. Big move here, right? Big move here, retracement. Big move up, retracement. And again, very, very strong move down. These are great for picking profit targets, right? You always want to have these as profit targets first. Now, being that it's 12:30 in the afternoon, could this be the low for the day? Yeah, it absolutely could be. We've gotten, anybody that got long off a positive open has already definitely gotten themselves out, right? Now we've stabilized, and I'll move it over just a little bit so you guys can see, but this is an area where it was a nice push, an impulse move, a correction move back, and we based, and then we launched off of it. So it was a pretty telltale sign that buyers were going to step in, and they have. It's rallied up a little bit up to there. What about 30, 40 points already at this point? And again, this is only a 30-minute chart. Right now, I'd be looking for, again, a little bit more stabilization, but look for a reversal. Like I said, I mean, there's comments out there about the economy is great, everything's looking good. I mean, gold was getting hammered, oil prices are getting cheaper. Obviously, weather is having some type of an effect on this. But again, things will, the weather patterns will move, the snow will melt, people will spend money. Again, the Fed thinks that there is nothing wrong, that this is normal investment. And we have $1.9 trillion to spend, right? And it looks like, I guess, Biden's target of vaccinating 100 million people, I guess is on track. Although I don't know how much of that is Biden doing anything versus just the companies getting those production levels up. Again, trying to produce more, and I guess some of it is the sites and the centers, but I think a lot of that is more supply based than it is anything, you know, on a kind of an infrastructure basis. So, anyway, where we are right now, I'd be looking for this role. Hourly wise, really things that I would keep in mind on this one is really how do we go back up. There's a few levels here that I'll bring it to an hourly. There's a few levels, so I would say down here at 13,633, it's an area where we've had some, obviously some downward pressure, and we've taken a very, very quick bounce. There's a large, here, I'll mark it off here. There's a large area here. This is a little bit too big to trade off of for me. It's much bigger than the average candle, so it's going to be a bit too much risk. But I do think where we are right now, if we can stabilize here, this could definitely be a launching point for us to push back up again. And in any type of long, and like I said, we'll see what the numbers look like later on this week. But I would say, I mean, there's going to be a little hiccup in here, a little hiccup here, but I would say profit targets for anything long, I would go 13,858. And remember, I'm using ECN data, so I can have all this on one set of charts. So my numbers are going to be slightly off, but what I would do is any long positions here, look for the bottom of that green candle right there. For me, it's 13,858. Again, find what yours is and base it off of that. All right. S&P had the same thing. We did not get the pullback, unfortunately. This one's target was down here at 1317, and this one actually turned a little bit early. I wouldn't say it turned in the best of places. I think this one kind of followed the other two on an emotional level. So, yeah, I would still say short-wise, keep this one down. It's got some. This one has a little bit more, a couple more areas up here. Like as sellers right now is a little bit higher as well. It's not as clean of a drop as the NQ has. Bring it back to 30. Yeah, it's not as clean. There's a lot more wicks back and forth again. So, really, again, I can see the same retracing, see the same level of retracing here, probably up in this area. Yeah, you can see the indicator's got something drawn up there already. I'd watch something small up in here, right? I mean, really, I'd probably draw the level more here is where I draw it. Again, we had this nice little drop sideways and then kind of punch down, and ended up providing an opportunity here and an opportunity here. So kind of keep that on your radar as well. I mean, maybe if we can rally up there, we can get an end of the day kind of roll back over at the 39.48. All right. But I wouldn't necessarily be getting into too much from this bottom side until we get down to the 1397. So I'll mark it off kind of curve wise, guys. I'm looking at about those levels from right there, right? Top to bottom. Top section, bottom section based over here. A little bit off on that one, but that's okay. All right, top and bottom. Look at the Dow. So the Dow also did not have, it didn't give us the very clean pullback. Whoops. It did not give us the clean pullback. It tried. It tried really, really hard, but ended up not giving us. And again, it whipped back and forth again. Now this one had this little hiccup. Let me move this over just a little bit. You can see this one had the little hiccup right here. Very, very easy to see. And what was the response? It hit here. It came up. It opened. It dropped in there again. It went all the way up to here. Came back down, opened. Came all the way back up. And it came all the way back down and is now pushed through again. So it's definitely been a hiccup level, not anything we necessarily wanted to trade off of. This one is much, much easier to draw the curve, right? I would say that using the top here, and let's use the bottom level over here, is our kind of our levels. Now, if you are short today or you are getting into a position, 31,383, it's an area without a doubt you need to respect. So any shorts, I would make sure that you were out at that level. And again, same thing. If you're pushing back up, I mean, profit targets, top side, I mean, there'll be a little hiccup in here, but again, 31,646. Watch this level. We had decent basing, a nice punch in a base below before it punched higher. So again, impulse correction, impulse correction, impulse correction. We'll see if we impulse back down again. But any type of base down here, I mean, if we can enter this area here and then start to get like a little bit of a hiccup, it doesn't go past the prior swing, look for, I'll give you a little bit benefit of the doubt there. Let's say it does this, and then we can look for a bounce higher. Okay. Again, this, not so much this piece. This is what we're looking for, right? The Harry Potter confirmation, right? Up, boom, boom. A little Voldemort action there. All right. All right. So that is indices. Like I said, the 12:30 is always the hardest time. You got to really look at these on the low time frames, early morning, look for 10 o'clock reversals, and that's what we had today. But I would say either of these two tops or bottoms, I think we should be good. Look for confirmations, and we can go long for tomorrow morning. All right. Now let's switch across to Aussie. So I mentioned earlier I've been looking for Aussie to roll, and we've had some data that already has us rolling to the downside. And it's made a decent push. Again, profit targets now are going to be down here over at the 77.27. It was a decent level of basing, nice pop up, and it's rallied up. It ran into a 4-hour zone. It pushed it to the brink, but it did run into that 4-hour zone up top, and also gave us a failure to go higher. You guys can see right here. It literally pushed to the brink, right? It did not break. It held, and again, rolled back to the downside. So it's a level that we've talked about before, the 87.08. Right now, the two things that I'm looking at are, one, I want to see what it does. If we can take a bounce, this could be a level we take, but it is a level that is not necessarily the cleanest or freshest. And then I'm looking at this one right below. You guys can see it. It's actually marked off by this green here. But this level right here, there was a bit of a base and gap, and we have not gotten back to that level yet. I'm also looking at this little piece right here. Okay, I don't know if you guys can see that. I'll go down to a 30-minute, and right here. Right here. Do you guys see this? Really from here, right there. Okay. Again, racetrack. So what am I looking to do on a 30-minute? Again, if we come down and we can break through, I'll be looking at taking that somewhere along these lines. And again, this would be kind of a green right here. Right? Whoops. Right there. And then again, obviously your risk level would be here. And I'd base it off the full level, not just this little tiny one. Something along those lines there. All right. And again, continuation trade to the downside. All right. I would not do it here. There's not enough room between the 77.27 and that level, right? If you're trying to mark this off on your charts, again, this is going to be a break of approximately 76.95. All right. Anything below that the 76.95, look for a drop of base, a pullback, and then take that short. Gives us your established level of risk. Depending on what time of day we hit that one as well, you could take this one down inside of the 2-hour binary realm also. Now, AUSSIEN, very similar picture. This is the hourly. We're very high. This one has been chopping back and forth. I'm looking for a break in this one, but this is not going to be as clean. This is not a straight up kind of area here. You can see it ground its way. It's not one big pop. But right now, we got to get out of the current range that we're in. Now, this range here is about 40 pips. So, I mean, it's a decent range back and forth. This was your profit target from this roll, but unfortunately, it didn't give us a clean retracement back. So, quite harder to get into, right? So, the thinking on this one is, again, we're looking for kind of a retracement back down, but there's going to be buyers in a few different areas here, a couple in here. So although I like this one, it does kind of match up. It would probably be more of a, probably there. I got to see where it comes on a basis. Like, it may use this level, but it pushed it to the brink. I do think this one will break the next time it comes through. And there is kind of a smaller level sitting right here that, again, touched here, got very close. So probably I'm most likely going to look at it here, right? And again, the 1 to 5 is all the way back down to where we had a prior zone at. So kind of looking at those. I mean, this one, the risk on it is rather small. You're talking about 10 pips. You're talking about 60 in the other direction before we run into the opposing zone. And then again, have another Harry Potter below that one. But again, negative news tonight tomorrow night with the Australian unemployment numbers. That could definitely be the catalyst that drives us all the way back down into the 81 range. Okay. So again, these two, Aussie dollar, Aussie yen, both similar setups, very high in the curve. Australian news is coming out. We've had lockdowns. We've heard a lot of other bad news. These would be the way to play a lot of these two. All right. Now looking at euro yen. So euro yen is just grinding. And again, if I drop to an hourly, you can see there's no orange lines above, right? There's nothing. On a 4-hour wise, you can see that we do have something. It is sitting, is sitting way, and actually it's not even a 4-hour, it's a daily level up here at 129.17. So we have a decent amount of room to run. We got about 91 pips, right? This has a daily ATR of about 60, so it's about a day away. It could happen from now till tomorrow morning, or tomorrow could be the catalyst that drives us to that level, okay? It's not one that I'm looking to take long right now. As I said, the European markets have just shot down. Obviously, there'll be some yen movement in this one. Here you can see on the hourly, it's been kind of, pushed higher, and it's just really been chopping back and forth since the UK Open. I'm looking for it to go higher. I don't really have the best entry to go long, so I'm not really looking to take it long. But I do think, again, you guys can see that there's that level where the 4-hour starts coming in. This is the area we need to overtake from here up. Okay, I'll change this to white because we're not looking at that as a sell. So I'm looking to overtake this. Now, if by some chance we can continue to rally based off of yen weakness, right, in the overnight, this is a possible level that I'd be willing to take at the UK Open. And again, depending on how close we get, actually, I'll just jump over real quick. Let me check. Let me pull knockouts up. It's approximately around 129.17. Ooh, that's good. All right. So let's go back up to a daily. There we go. Our 4-hour works. I can do it from here too. Let's do a price level up top. All right. Looks like the far part of that zone is at 129.29. There just happens to be. Yep. There happens to be a knockout in a good geographical location to that level. So again, always like when knockouts are pretty close. And actually, Todd, I don't know if you're still out there. Todd, do you have it? Are you there?
Yeah, I I am following along. In fact, let me bring up the Euro Yen knockouts. I am going to take presenter back from you if you don't mind, just so we can share the platform. Why not, right?
Yep, you can have it.
I am going to. I just got to figure out what I'm going to show. Here we go. Okay, I think we're there.
I can see it. Yep.
So, all right, so I'm going to go ahead and jump over to the knockouts. We're going to go over the to the foreign exchange, and this is the Euro Yen, and you can see where I'm clicking. And I'm just going to click on any one of these knockouts because the nice thing about the Nadex platform is that it brings all the knockouts up. So on the left-hand side of the screen, and let's stretch this out a little bit, and we'll bring it in a little closer. All right. So, right. So you were looking for a knockout up in this range.
Yeah, somewhere
right?
up in the 129-ish, like 129.30-ish range. I'm trying to pull.
So, right. There's a knockout up in here, up close to it. I think the upper boundary is 129 spot 27.
Yeah.
So, if it got up there, I'm trying to fit it all on a nice, pretty chart, but it's it's got a ways to roll before it gets up there, right?
Yeah. Yep. We got about a day worth of movement. Like I said, that could be we could either travel there in the overnight, or that could be a nice push forward, and then
Cool.
Yep. That.
All right. I'm going to go ahead and I'm going to let me flip this back to you so you can keep going.
All right.
Can we do this? This is always.
I know, right? It's like, is it going to work?
You got to choose which
So I'm afraid.
one.
I'm afraid to grab like. I'm like afraid to grab. I'm like, here, you want to take it? I'm like, okay, if I click this and drag this in, is it going to mess everything up? Anyway, you guys can see where that one is. So yeah, I marked that one off. I think that's a decent one there. I was looking for weekly call spreads as well, and unfortunately none of those match up. So it looks like the close proximity knockout would be more of a way to play that. And again, what I'm talking about is, if we can from now till then move up to here and be here for the the UK Open, I would like that. I think that would be a good opportunity because again, I can see short euro coming in when we start to see data out of Germany and France if it's negative. And again, maybe we're not. Maybe we flatline and then we get good data. Well, guess what? That would drive us higher, and then this would be the roll point for tomorrow. Now, we're too far to get into the position now, so please, nobody get into it now. The risk on it would be way too high versus the reward potential. Again, we want to get a little bit closer to that level up top. Now, pound yen. Pound yen, we had a level up top. Now, this was based off of kind of some 4-hour levels. And we mentioned that we're not quite at the extreme. It wasn't, again, it's a little hiccup, but it wasn't one of the big levels that was identified on the higher time frames. The daily level starts up here where this white box is, right? So here's where the daily level is starting. It's also at the extreme range of the curve. So kind of the same thinking. This level is coming in at 148.06. Now we are driving through. Many of you know what this pattern looks like, right? When we had a prior zone that we kind of based and bounced sideways in, it's a Harry Potter trade, right? And actually, I guess we would refine this down to here. And you guys can see, again, nice push, pullback, and we're driving higher. So, at this point, most of the movement has already happened. The UK session is obviously over. This one needs to move about 77 pips. Now, obviously, pound yen can move, right? Daily ATR on this one is 90, so it's one of those things that this could absolutely do this the rest of this afternoon before the UK, but kind of the same thinking. If we just kind of stabilize and kind of come in here for the rest of the day, and then we have a bounce off the UK numbers in the morning up, then we'd be looking for a reversal back down, right? Something along those lines. If we decide that we're going to continue with the green and kind of move up here in the morning hours, then again, I would kind of take this one and say, hey, listen, it's probably not a bad area as well, to be able to look for another rollover. Like I said, the services and the manufacturing PMI numbers can absolutely be big, but again, coupled that with the early morning pound data as well too, there's a lot in there for that one. Let me see. Hold on, let me try to pull this on this other screen real quick. Hold on one sec, guys. What is it? 148. This one's a little bit harder. All right, so here, let me pull in. I'm not going to pull in. I'm just going to do it this way. 148.54. Okay, there's a knockout sitting. There's two knockouts in here. There's one at 48.04. Problem with this one is, what is it? It's right before an area where we have proven sellers. Then we have a 148.54, which is just a little bit higher up here. Again, this one is not horrible, right? It's deeper into the zone. That may be the one that gives us a little bit of potential, because remember, any type of spike up, if it breaks the 148, you're out of that knockout and you're going to miss the downward side move. So of those two, again, maybe you take very, very tiny risks, but depending on when we get up to there, whether it be from the early morning news or the other, the services and manufacturing, either of those I think is a decent level off of that, off these two, 148.04, 148.54. Looking at pound dollar. So pound dollar, we had this zone marked off. This one's been up here for a little while. Again, we hit it. This one actually gave us a retracement today as well. Big collapse, big retrace. Unfortunately, this one made it weird. I was looking for this to come all the way back down, and we got close. We got within 13 pips, and then it retraced back on us. I would say today this one also, seems to be more of a dollar strength type thing. Looking at the way that it got turned around, this was also a 10 o'clock reversal. Unfortunately, I wanted the 10 o'clock reversal down here, not here, but we missed it by a little bit, and it took off and ran on us. So I would say right now, if we manage to put in a base here and push higher, I do think this level here at 129 or I'm sorry 139.40, it's okay. I mean, it didn't explode out. It did give us a base and has given us one area here of confirmation that there were sellers in here again. It's kind of got front run a little bit, and that's the one thing that kind of has me hesitant. But kind of the same thing. I mean, we are now about 35 pips away. The pound is done for the day. Dollar, we'll see how much more that it has in it. But really, I'm kind of looking for again the pound news tomorrow. Kind of looking for anywhere in this area. So this is kind of our looking to sell, looking to buy range. Targets to the downside, the 138.40 is obviously sitting right in here. So that's really, these are our two targets, right? We got one sitting right in here, and we have this one sitting down really right here where sellers have stepped in. Either of these two are decent. I think the pound data with the lockdowns and everything they have, I don't think, for the last month, I don't think they're going to be as good as expected. So I am trying to figure out the correct opportunity to take this one short. Again, what I would do is if, we have a lot of room to be doing analysis on a 30-minute now for news tomorrow morning. That's, 14 hours away. Look at this tonight at 9 p.m. Eastern time, depending on where you are. See what type of movement we have. If we push back up, have we pushed in one of these lower levels? And actually, I guess we can put the curve here. Excuse me. We'll put the curve kind of in that level right now, right? Remember, no man's land in the middle. We're not interested. Up top, we're looking to get short. Down below, we're looking to get long with that one. But I do think that the pound will be a decent mover for tomorrow with the data that we have. Okay. Now, euro pound. Euro pound, here, I'll bring it back down to an hourly. I guess you can't see it from, oops, there we go. Euro pound is sitting on a daily level. Now, it's a level that we've talked about before, the 187.14. We've had a couple different levels marked off. We were looking for a break of it here. We pushed down, and it finally completed. So right now, where we're sitting on a 4-hour basis, it's an area where we expected buyers to step in. We've seen a little bit of a push out. I don't think that the euro or the pound is in any better of a position than the other one right now. Maybe the pound is in a little bit better of a situation. On an hourly, you can see again the bounce off that initial 4-hour level here was basically retested, and we're in the same area. So I would say I would maintain my bearish sentiment this one. We are in a 4-hour zone. I think that the pound will have some initial weakness tomorrow morning where we could have a potential pop, but I think there's just going to be the overwhelming data. And again, the services data for France and Germany does not look good. Um, so it's one of those ones. It's where the technical meets the fundamental. And again, how much of this is the market preparing for what we already have coming in? So, I think it's going to be more difficult. I mean, purely based off of technicals, yeah, we are sitting inside of a daily zone right now. It has come down and hit, but I do think that the pound has their stuff a little bit better ahead, right? I mean, they've been through a month of lockdown. They're lifting lockdowns. All this is positive news. And remember, for the most part, I am probably a 90% technical trader. Something like a global pandemic, something like we've never seen before, something like war, those are things that are a little bit more difficult to prepare for. And the question is, will something on a pandemic level hold on a 4-hour chart or a daily chart? They're all tested eventually, right? Every one of them is tested eventually. And this is a zone here that it's been a while since price has been here. And has it been tested? The answer is yes, right? It's been tested. Actually, it's been tested down to about that level right there. So you can kind of see we're approaching where the untested level is. So the question, do we take a bounce off of here, right? And right there. And again, 1 to 3 risk to reward target is not bad. So yeah, it's a potential one if you guys are looking for something. It's got to go just a little bit more, about 9 more pips to the downside. And that would be approximately at 86.92. So it's there. The unfortunate part about this one is we're hitting it after the UK and London, after the UK and Euro markets are closed. It's always better when we hit them when we're starting the trade session, not right when it ends. So it's like wah wah wah. All right. Euro dollar. So euro dollar, we talked about a position here yesterday. I mentioned there was a kind of a small intraday trade setup. If we broke 121.12, look for targets lower than that, and we did. We hit our 1 to 3. It ended up pulling back. It was a very quick trade. It based in here, pulled back on the 15, and then dropped down, hit the 1 to 3, and now it's kind of pushed higher. So, this trade is over. Hopefully, you guys were able to grab this one from the morning sessions. We'll go back up to the 30. You can see how fast. I mean, you guys can see the wicks in there. Pulled back and it tagged it literally right to the dot. So we'll delete it so we can clean it now. Take that off. We'll leave that there. Let's extend this across. We're going to use this for a bit later. We'll use this and we'll drop this down to here. So right now, I would say for us to draw the curve, we have sellers up top, and that's going to be an overall eventual target up top. I would say probably, let me see where that is on an hourly. Yeah, it's fine on the hourly. I would say any type of long positions, I would be looking for profit taking up here at 121.65. That was really the start. And again, this is a level you guys known about. We've been talking about this 121.66 for a while. I mean, you can see how long. I mean, here's the hourly chart. How long have we been talking about this? Since, geez, all the way back early. I mean, early. It's been longer than that. Here was your alert. Middle of January, we've been talking about that level. Well, there was your bounce this morning, right? There was your bounce into that level. You guys can see it over here. Okay, huge push to the downside. Right now, we need to stabilize, right? We need to come back into a position. I'm going to move this here. You guys aren't going to know what that means yet, but here is kind of your middle of the curve no man's land, right? 120.88 with a confirmation bounce. We take this one long. Actually, let me see. What is that zone? 2080. Let me see, what do we got here on knockouts? Euro dollar 120.80. Oh ho ho ho. There's a 120.78 to the downside. So we got one sitting right here. Okay. Again, for tomorrow morning thinking, this would be our established level of risk for a knockout, right? Right about there. I'll change that to pink. I'll move this over just a bit, just to get it out of the way. So we have one there, and let's see, what do we got top side up at 121. 121, really 75? Oh, there's a 121.78 right there. So let's draw another one up top. All right. So for those of you that have not traded knockouts before, this is a very interesting situation. Okay.
Want me to punch those up over on the Nadex
Yeah,
platform?
if you
can
want
talk
to, yeah, go ahead. Yeah, I'm pulling it. Like I said, I don't want to pull it in because I got too many. I got too many windows up already.
You got 18 screens,
Yeah,
50
I got
windows.
too many. Yeah, I got two portrait or two landscape, one portrait. I got an ultra wide up and down, so I got like an extra two. It's crazy.
I'm familiar with how that goes. Let's do this here. So yeah, if you want to talk me through it, I'm just going to go ahead and
go to the Euro knockouts.
Okay, so yeah,
I
this
would
is
go
the
into a 30-minute.
Oh, let's do that. Okay, let's
start with 30
let's
minute.
make it look
you
nice
guys
and
can
pretty.
see. Yeah, so you can see down at the bottom around the 120.90-ish level. You can see the buyers down there stepping in back near the 12th. Yep, right in there.
So here, I'm gonna, you know, I like to do this so people can see our thought process and how we kind of, right. So Brian's seeing some buyers step in, right down in here.
Yep.
Right.
Yep.
There we go.
Obviously, you got to do it from the top side up there around the 121.
Right, and then here, well, let's do this, and then yeah, and then here we go. I'm gonna draw the top side. Right, it's about 121.70-ish.
65 to 78 is what it is.
Okay, so right in here.
Yep, up top. Yeah, that was the trigger this morning. So we hit it this morning, and then yep.
So right, so yeah, now I'm just gonna fiddle around so you can try to see.
Yeah, so you can see how the smaller risk up top on there.
Right, and then
there you go. There's the small risk on the bottom.
And the small risk on the bottom. So
yeah, so two different.
Yeah, if you wanted to go through,
I don't know if it's going to be high or low tomorrow. I don't have a crystal ball, but I just know that if this then that trading, if it comes down to either of those two levels, there's low risk in either one of those two trades because we are near the floor and the ceiling. So two potential trading opportunities for those that are new to knockouts.
And for those who aren't familiar with knockouts, right? If it touches one of the boundaries, you're knocked out of the trade. So you've got very clear defined risk reward. Now, what Brian's talking about, like let's say you were looking for a bounce in here and you wanted to go long. If you actually bought one down in this range, if it went and touched the floor, you would get knocked out. All right, you were wrong, and it kept going lower. But it's you think of it as a stop loss. All right, you're knocked out, and you're managing your risk in the event that that you're wrong, that the market does something else. Now, just because if it bounces and goes higher, you do not have to wait all the way until it touches the top boundary to get knocked out. These are week-long contracts. You can see that this still has 3 days to go. If this were to bounce, and you could always choose to liquidate your position early, take a profit. Particularly when Brian's talking about, hey, we might see sellers come in up at this range. So again, you can day trade these. They're delta one. You'll notice that the price of the indicative underlying price is always generally going to be right between your bid-ask spread. So unlike a binary option where you're trading a probability or a call spread where there's premium, knockouts, delta one. So interesting there. All right, you ready? I'm going to flip this back over to you, Brian. You good? Here it comes. Hot potato, it's yours.
I know, right? It's like, I think you can see my chart again, right? Yes? I think you can see.
Yeah, you're all good.
Okay. All right, good. All right, so there's Euro dollar. Dollar CAD I mentioned also could be an interesting one. We talked about obviously the potential for some not so nice Canadian news. And again, you're seeing this one a 4-hour level base off this 126.16 level we talked about for a while. We're looking for kind of a stabilization and balance. It didn't give us the very clean pullback to it, but again, a 4-hour level we talked about. Interesting spot that we're in right now. And again, you can see that we have a bit of a gap in here, right? We're hitting that level right now. We've already kind of pulled off of it one time. And I would say with as much movement as we've had, this being up about 70 pips, the dollar CAD has an ATR of about 78. So we've had an entire day's worth of movement in really the last, I mean, really here in 3 hours. So one of those things, you can typically expect a retracement. Is it coming in here? We're probably getting close. Like I said, it's starting to get pretty wicky. It made one attempt to the downside, found some buyers to step in, but it's even kind of on a smaller frame, you can see that that's really where the popping occurred, really from there. So, we've had a decent level here already. I would say if we can get a very clean confirmation, a little bit of a roll to the downside, and again, you can even use some type of a color change, like a red candle, green candle, and then another red candle down as a confirmation. I would be looking for some type of a rollover back down on this one, back down, and again, profit taking around here, the 126.30 range. I think is really kind of where this needs to be, right? Again, all the comments this morning were great for the dollar. We watched gold collapse, strong dollar strength come in, but looking at these three candles, from here, it's just way too much, way too fast to not have any type of retracement. So, look for potential retracements. Up in again where we are right now, the 127, 127.02 up to 127.11. So, a 10 pip range in there for some type of a reversal back to the downside for dollar CAD. And like I said, I think the Canadian dollar's news later in the week is going to be a kind of a big one. Now, dollar Swiss, we were looking for this one to kind of bounce somewhere down in this range around 88.81. It's a level we've talked about for I feel like 2 weeks now. We finally got the bounce this morning, gave us the dollar strength we were looking for. You can see where we had our level of risk and where we were looking for this to go. It did just come off the 1 to 5, and now it's having a little bit of kind of stability issues at this point. There is a small level above on the 30-minute. You can kind of see there that we are. That's a previous one. You can see it's just a little bit higher. The problem is when we get down to these little 30-minute time frames on the dollar Swiss, I mean, we're talking about a risk level in this one about 4 pips. Right? If I take actually the hourly level, we're talking, 5.2. Just like the dollar yen, I would say that this one is also probably due for a retracement, looking for it to roll back down again. I don't think anything again, remember, we did just have $1.9 trillion approved. We don't know what we're spending it on yet, but you got a lot of money. It's burning a hole in everybody's pocket, right? I do think that will roll and flip. I don't think the Swiss is necessarily in a horrible position right now. This was purely dollar. And again, look at all these 30-minute candles out here. And then look at this, just 3 candles of straight up. Even like on a 4-hour basis, you can see there's very few candles. Whenever we see anything this big, you tend to see a retracement come real fast right back again. So, again, kind of the same thing, 89.34 on that one. As I mentioned earlier, we were waiting for the dollar yen to get just a bit higher. We had a zone there, right? And again, here's where we were sitting earlier today. And I mentioned the bottom one didn't interest me. We had this top one. It's kind of like, listen, we got to see what we're going to do at the open. The open was the big question, right? And if you take just this here, I'll mark this one off, and then I'll show you what we have going forward. You guys can see what this pattern looks like, right? There was a zone. We had hit it before. We talked about retracing. Here's 10:30. Here's the open. What did this do? It broke through the level. At 10 o'clock, it reversed back down. At 10:30, actually at 10 o'clock, it grabbed more orders from the open and then took off higher. And now we're approaching the 105.97 level, and that's just what we dinged off of right now. So, I said we had to be able to stomach the open. The open was literally that drive forward and pullback. Kind of the same thinking. 105.97 was the short area. Looking for this to either stabilize and drop, or again, you can drop down a lower time frame and see that it's already starting to have some issues off of this level. From there. Okay. All right, let's mix it up now. Let's go across, and I'm going to go back over here, and we're going to go back in, and let's talk about the 3 biggies now. We'll start with oil first. All right, we're going to start with oil, right? Oil, obviously, yesterday from that 57.86 had a huge kind of it exploded, right? Went high. Yesterday morning, we had a decent kind of not only top put in, but entry and a retracement. And all it did was bring us right back to the same level. Now, you guys know I love these things. Again, I love the gap. Gaps typically signify that there are buyers sitting there. There was an imbalance in price. And again, it's hit it, it pulled up, it hit it, pulled up again. It dropped a little bit lower and it stabilized. But overall, I mean, if I was going to draw a trend line on this one, let's see, trend line here, you can see that there is a trend line sitting right there, right? And again, I didn't have to move that one too much, but you have a touch here, touch here, touch here, touch here, and we're starting to roll across that. So the overall market is planning for this to drop, right? I would say at this point, kind of the same thing. The Harry Potterish, if we can kind of blow through, look for a pullback into this level here at 59.45-ish level, right in, kind of right there. These are new. I'm using this as a new thing now. But if we can get into this level here, look for a potential drop below, obviously a break below 59.45. Look for a potential drop. And then again, targets, I would say. Targets probably first target down here at 58.50. And then again, another one would be, sitting down a little bit lower. Let's do this one here. We'll change this to green. And then maybe another, and maybe secondary target here. So, remember, oil inventory is not tomorrow, it's Thursday. So the big question is, can we break through? But again, break through 59.45, pull back, and then drop down to those two different levels. And it's really, oops, let me click this. Let's see if I can get it right on. Right there. I would say that those are your two targets to the downside. So again, you're looking for about a 90-cent move and then, $1.45 to the downside in oil. Because remember, oil is already starting to come back down. We know that pipelines are frozen. It will get warmer in the next week. And then when everything's flowing again, that should also, again, supply should start to raise. All right. But again, oil inventory report, I would say look for shorts in this one. Not necessarily interested in getting long from there. Let's look at gold. So, gold. Here's the green line that I drew earlier today. I said look for a reversal around 1790, right? Its low was 1789. So it literally turned around there and then drove us all the way back up to 1814. So hopefully you guys were able to grab that, and it's one of the things I love about binaries. Remember, the open was the magical candle. Here's the 10 o'clock reversal. We'll drop it down to a 30-minute chart. You can see that here's the open right here, right? All this pre-market news ahead of time. And if you were the retail trader, and I even said, this is what retail traders do. They see a big move in price. It's like, oh, the market's opened. I got to get short, right? Everybody's getting short. And what did it do? Boom, it popped and went straight back up again. And now it's retracing back lower. So 1800 is a big one. I would say, everything we've seen with gold right now, we're not seeing inflation. It's not into the market. They're saying that this is not a bubble, that this is normal progress. None of this terminology, none of these things that we've heard has been good for gold. Bringing this up to a little bit, we'll go like a 2-hour here. You can see, obviously, psychological level here. You can see that we have buyers stepping in just a bit lower, right? If I do a horizontal ray lower, you can see that, buyers have stepped in from there to here, right? And that's kind of the level that we just kind of drove through, right? And tag. So I would say this is going to be a big telltale area. I don't know that necessarily it's justified to break below this. Like, I don't know that we're going to have 1750. I mean, I think there is some justification keeping it in this range. But this is the last big area. And again, had you done a 1 to 3, you were out at that level. So watch it. If we stabilize in base, if this is one of these situations where we'll do a trend line. Let's make it solid. If we come back down and base sideways in here, then I'd be looking for this to potentially, again, go lower, probably down into the 1760 range is what I'm looking for. But again, if we start bouncing around, that could be our stabilization point. We've seen it in the past. And again, it stopped the free fall this morning and rolled us at 10 o'clock back to the top side. So, but if we do come down and we do base sideways in that area between 1792 and 1784, again, look for a collapse, potentially down. Let me see. How far back can I see? Next area, probably I'd want to be out about 78. It's a bit close. This one's going to be hard because we got a bunch of junk down here. Let's go up to a daily. Let's see if I can get a clean one on a daily. There's a few down here. Nah, yeah, I'd probably use that. We'll use the bottom right here. Yeah, we could use that one. Yeah, so right around 1760. Yeah, right around 1765. All right. Let's go across to silver. All right. So silver, magically, look at that. This is a level that we've had marked off for a while. And here, I'll just do it on the hourly just to stay consistent. Here was your level of basing. There was your pop. There was your test. There was your test. And there's your free fall. There's your touch. And your price higher. So again, right now we're in the middle of the curve. If we're drawing curves, we're going to go from here to here. Whoops. No, I don't need to create an order. Thank you. We'll change that to gray. Ooh, can't see that one at all. Let's do gray. Right. I would say that this is our intraday curve level right now. And again, remember, no man's land is sitting kind of right in this middle third box. We don't really have a lot here. Again, if we do have another one, the trade of the morning here was at 9 o'clock this morning. The pre-market move, the open at a level of buyers. Again, everybody that tried to jump in is out. Top or bottom, I think we're good. Remember, same story. No inflation, not a bubble. Don't know what we're going to spend money on, but if anything, I would say we'll come back down. And this one, kind of the same story. It looks like we are clear probably till probably back down in this level. So I would see what kind of base. I'd watch this one, right? I assume we're going to come back down. I want to see where the basing level is, reestablish this level of risk. We may have to shrink this a little bit, and then look for a potential short position coming in, something along those lines here. And you should be able to get a 1 to 3. That's a 1 to 3.3. Should get something in there. But again, we got to figure out where the new level is, right? Look for the stabilization. That will give you your established level of risk. Look for a drop at base, a pullback, tag that zone, and look for a short down. And remember, potential buyers are stepping in at 26.31. All right. All right. And I did mention it, but there's your GameStop. Stop. So again, be very, very cautious, Reddit users, when you're, telling you to get in. Look what happens. All the way back down to $49. So this is what happens when the average Joe takes on Wall Street. All right. All right. So with that said, go ahead and mark your calendars off. Make sure block it off February 23rd. I can't believe I'm saying February 23rd already. Next week, same time, 12 p.m. Eastern. For those of you that are not catching us, make sure you jump over to YouTube. Catch us from 9 to 9:15 every morning. If you have questions for me, don't hesitate to email support@keeptradingsimple.com. And I'll see you guys tomorrow morning. If not, I will catch you guys next week. Take care. Thanks again.